If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome everyone to another Bitcoin update. Yesterday's daily candle was very important. After we saw this dumping, it was vital for Bitcoin to hold the 20 daily moving average in order to continue with this uptrend, as previously shown. When we do actually get a dump into there, as long as it can confirm its support, just as we've seen today, we should get that follow through. If in time we do actually lose the 20, then we're looking for a deeper correction. And in yesterday's update, we said that 38 to 40k needs to hold. The 55 is at exactly 37,000. So I guess we dropped this 1k, but I've already got a box of support drawn out previously. This is a golden pocket that can be shown if I zoom out a little bit more. This is the 618 and the 65 between 39 and 40k, and yeah, essentially we need to hold that going forward. It's pretty much just using the 20 daily moving average, but nice to see some confluence within that zone, suggesting that this is a key level. So now that we have broken above it, it's vital to confirm it as support. It wouldn't be the worst case scenario if we do lose it. It just puts in a larger correction, and of course alts will get hurt during that, but as you can see, in order to keep this daily uptrend completely intact, for an eventual follow through, even if we do correct lower, the price of $32,700, the 0.5 Fibonacci, as well as the 200 EMA is the level that must hold going forward. We did actually mention that in yesterday's update, but we're going to zoom in now on the 4-hour time frame and explain exactly what needs to happen right down here right now. So make sure you stay tuned, like, subscribe, comment and share so we can hit 7.5k. And in the end of this video, there will be a little clip of the education that I offer. If you want to take action, use the links down below. Now let's zoom into the 4-hour time frame. Now the daily analysis is all complete. We know the level that we want to hold just to get that immediate short-term continuation over the next few days, but it wouldn't be the end of the world even if we correct lower back into a previous level of resistance, which would now be support, shown by the 55. And if all hell breaks loose and both of these moving averages are lost, then the 200 EMA is the last final the step that's in the way from flipping this trend into a true bearish trend. So essentially we could correct all the way down to there and it'd be totally fine, and that's about the price of 32.7k. But we're not looking for that as of yet, because we're simply holding all of these key levels. So now let's go through what needs to happen as we've now confirmed this key level as support on the 4-hour time frame. So now that we are here, it looks a little bit different. We can clearly see the double top pattern with the neckline being lost and validation and pattern actually completing as well. The technical target definitely was met, and now it's a little bit different because remember, on the daily time frame, that level of support is the 20 daily EMA, but on the 4-hour we don't have anything else there. So that's why I was very key to use those other fib levels, the 618 and the 65 over here, to show that that was once a resistance. We've broken through, so this dump is essentially coming back down for support in that zone. And then the daily time frame analysis, where the daily 20 moving averages is also guiding us to say that this is a key level of support. But usually what I would say when we're on the 4-hour or any time frame, if we lose the 20 and the 55, I would say that this begins a correction to the 200 EMA. But as you've seen to the left previously, even when you lose the 55, you don't necessarily go all the way down to the 200 EMA. So what we're trying to spot, maybe before we even reach this point, are bullish reversal patterns. So essentially what needs to happen now that we've confirmed the daily 20 is a reclaim of these moving averages before a bearish cross forms. Right now, as you can see, we have been dumping. The pattern was made valid on the break of this 43.2k support, and then technical target was also met because of how aggressive this came down, and we already started to get those supports being shown. So that was the move from the 20 daily moving average, and then we came back down to it again and then held it as support. And then we can also see the reactions from the golden pocket area, which is the 0.65 Fibonacci at 41k psychological level. So we are above that at the moment, so we are seeing that it was holding a somewhat of a support. And oh, I've just messed up right there, sorry about that guys, I don't want it to open during the video. Oh, here we go, there we go, sorry about that. So what we now need to see going forward is a key level of support being maintained, so we don't actually have to correct down to the 200 EMA. If we can now consistently see 4-hour closes above this key level. Now, yesterday we did have a moment where we went past that point, but we didn't actually close the 4-hour candle beneath that, confirming this wick over here, $40,300 as support. So now what we need to see is an EMA repel. The only way for this to form is for price to reclaim the moving averages, confirm them as support, and will stay in that bullish cross looking for continuation. Is there an example in the past that I can show you that proves this? Well, yes, just over here we've had multiple chances of forming bearish crosses when we lost the moving averages, just as we're seeing right now. But very quickly you can also see the moving averages failing to cross over, keeping the bullish trend intact, and that's why we've climbed back above, confirmed its support, looking for a new higher high, which we eventually did see. Now the same scenario happened, we put in a new high, amazing. Let's now fall back to the moving averages as support where we actually lost them, and so the assumption is we continue to the 200 EMA, but please understand that you don't have to come exactly down to it. We're looking for bullish reversal patterns either at it or before it. So we've seen that over here. We've essentially almost formed a bearish cross where they cross over to confirm we're going down to there, and then we never got that crossover. This is called an EMA repel, where they fail to cross and you get slung back above, confirming at support, and then eventually breaking this high, which we've seen now. So we're consistently in this higher highs and higher lows uptrend, but also every single moment where we've lost the 55, 20 and 55, we've not actually continued to the 200 and seen reversals before the bearish cross had a chance to even form. And right now they're about to cross over, so the only way to invalidate any further dumps to the 200 EMA would be price now pumping from 41k, reclaiming the 20 moving average at 42.5k and confirming its support, and then we're thrown back into an uptrend where the EMAs actually don't cross over and they just continue, with price eventually breaking through our 44.7k top. Guys, please don't forget to like, subscribe, comment, share. If you want to get educated so you can learn this all for yourself, private message me on Twitter. The links are down below. And the final thing before we end off this video would be going off of this high to this current low at the moment. We can only go off of what we're currently at, and so we're also being shown that the 0.5 Fibonacci is a very key level, as we have the 20 there. So that's why it's another indication that we need to pump from this location, reclaim the moving averages, also flipping the golden pocket into support for the creation of the reversal wave. And remember, these examples over here in the past where the EMA repel happened and the bearish cross failed eventually brought us new highs. So we came back up inside, back into an uptrend, made a new high. Same thing, created a high over here. We went down, lost the moving averages, reclaimed it, EMA repel, confirmed it as support, found a new high. So essentially what I'm now showing you with the Fibonacci's are the potential targets to the upside between 46 and 47.7k coming up very shortly, as long as we can form this EMA repel where they do not cross over and we reclaim and confirm it as support, flipping the moving averages as well as the golden pocket support, creating the reversal wave, which then is targeting between 46 and 47.7k. Thank you so much for tuning in. Like, subscribe, comment, share, and if you want to get educated by myself, use the links down below. Cheers everyone. I've got a whole bunch of educational content, and over here on the website you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour-long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.